And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Happy Monday, August the 22nd. My name's John Hoagland. Thanks for trusting me with your time. We hope that you had a nice, restful weekend and are rested and ready for another exciting week here. Always seeking context, risk management, and patience. It's National Fajita Day. Get yourself a fajita and maybe a margarita. I know it's only Monday, but hey, you got to start sometime, right? As far as economic numbers today, very little in the way of any of that. We do have some important things going on later on in the week. Tuesday, PMI Composite Flash New Home Sales, Richmond Fed Manufacturing Index, and we do have a talking Fed tomorrow. Wednesday, Durable Goods Orders, Pending Home Sales, and EIA Petroleum Status Report. And then we've got the Jackson Hole Symposium every year. The Fed goes out to Jackson Hole to hang out, party, and discuss the financial situation here in the U.S. We also have the preliminary GDP on Thursday. That's 7 a.m. Central, along with our usual jobless claims on Thursday, EI Natural Gas Report. And then Friday, we've got international trade in goods, personal income and outlays, consumer sentiment, the Michigan consumer sentiment, and then we've got Chairman Powell speaking at 9 a.m. from Jackson Hole. So nothing really too exciting as far as economic numbers this morning, but we do have the markets to keep us on our toes. U.S. stocks are set to open lower following that first week in 5 that closed lower last week. Investors seem to be on edge, awaiting anything that the Feds are going to be discussing or talking about in Jackson Hole. Traders also on the edge, facing GDP preliminary on Thursday. Isn't that on Wednesday? Yeah, it's on Thursday. My bad. It's on Thursday. Crude traders seem to be waiting patiently for information on the front of the Iran nuclear deal. Rumors have it that it's a lot closer to being sealed than it started the weekend. Lots of talk between the countries involved in it over the weekend. We're going to have to, of course, wait and see how that plays out. We do have crude opening, looking like it's going to open slightly lower. Where'd it go? Yeah, down about 34 ticks right now, so looking like it's going to be opening slightly lower. As always, if you like what you see, tell everybody. Hit the lucky like button, share, comment, question, feedback, and heckling, and love are always welcome on the forecast. If there's something we're missing, tell me, jhoagland at topstep.com. Subscribe to our YouTube channel so you get notified when we do go live. A quick look at the VIX, the dollar index, and the yield on the 10-year. VIX up pretty good this morning, 23.12. Dollar index also higher, looking to get that euro par with the dollar, looks like, 108.37. And the yield on the 10-year, 2.97%, so also looking higher a little bit this morning. Good morning, Dario. First in the room. You won the prize again this morning. Shaw, good morning. Good morning, my brother. Good to see you. I love you. Tachyon, dead letter opener J. Theo. Brian, Tachyon, Thursday and Friday canceled out for me last week. Well, I call that a victory. Scott saw and he conquered. Where did I go here? Frederico, Mr. Fox, Serenity Trader, good morning. Jack Doherty, good morning, sir. Always a pleasure to see you. Hope you're doing well. Michael, Brody, Dimitar, Ron, Jeremy, Vince, good morning, my man. This is the Scarlet Arachnid, the red spider's here with us this morning. I've been seeing some really big spider webs out in my backyard, some real big orb weavers, just putting up unbelievably beautiful webs. It scares my wife, but I like to see them. Very good architects, those arachnids. Terry King, Sarah Hall, good morning. Prayers and love to you as well. Denise, good morning. Orion, Marcelo, Bill, JST Wave, good to see you. Unicus with his quote for the day. Perfection is not attainable, but if we chase perfection, we can catch excellence. Vince Lombardi, the former head coach of the Green Bay Packers, my arch nemesis. Dark Heaven, good morning. Good morning to you. Rob T. Vlad, chilling with Dylan, Alfred, Glitter Sandwich, D.A. the Rooster, ending my losing streak this week. Good. I hope that you do. Are looking forward to your success. Jules, good morning. Daryl, dead letter opener. You can roll poop in. Well, I don't know what that means, but Hegel matters. Good morning. Dead letter opener, perfection is a moving target. Jordy, Anissa, Grim Reaper, Trader, good morning. Rusty Golfer, Steven, and Ish. It's good to see everybody this morning. Today, we do have group coaching at 1 p.m. Central. There is the link. Just put it into the chat so you can register and join me. Some really good sessions last week. Looking forward to some good sessions this week. Of course, we also have Make Hogue Money. Here is the link. Oh, here's the link if you would like to join Make Hogue Money, which is on Tuesdays and Thursdays currently at just after the market forecast. We watch the mini S&Ps open up, and we see if you can come up with some good trades to make me money. Good morning, Dan and Ann. Good morning to everybody. So, all right, we are ready to get down to business. Take a look at these charts. Again, hopefully you had a good weekend and a safe weekend, and you are rested and ready. We've got some changes in these markets. Maria, good morning from Greece. Good morning, Maria. Talking about the market, equities. Okay, yeah, it's rolled over a little bit, hasn't it? And we're going to take a look at that on the charts. Thanks for clearing that up, dead letter opener. Yep. All right. Let's see what we've got. Starting with the daily in the S&Ps. It's Monday. Mondays tend to be slower starting days for me. I've got a history of being a little bit less profitable early on Mondays, but the market is putting us in a situation where we may need to react early. We had excess at the high on last week. In other words, in the profiles, we put in the high and we rejected it swiftly, leaving a selling tail. So we have excess at the high. We have some weaknesses in structure down below. The market seems to be intent on getting down to those levels. Friday, on higher volume, we lost open interest of approximately 16,000. So it's not like we're bringing in new sellers, at least not yet, new business to the downside. We're still kind of peeling off some of the possible profits that we've accumulated over the last 4 weeks on this move to the upside as of Friday. Pretty decent volume on Friday, however, but that's what the market does. Equities like to build volume on down days and cut off volume on up days. So we do see here that we've to some degree broken upside structure. Okay, but again, in the open interest on Friday, it does say that we didn't barrel into new shorts. We got out of longs. When you're thinking about the auction process, we auctioned lower last week. Did we do a good job of it? Did we increase open interest? And as of Friday, we had not. Here's the 30-minute chart. Okay, we've got a kind of a high 40,000 foot view here. We've left a couple of naked points of control higher, but we still have all kinds of things to be looking at to kind of fix down below. We've got this gap down below, naked points of control all over the place. This one looks actually like it has already been taken care of over here. So I'm going to remove that one. But we do have this gap down below. We've got a couple of naked points of control. We've got weekly kickoff low down below. We've got quite the opening gap started here. So, the rational investor is here. Dan Emmons, good to see you. Good to see all of you guys. Brian, hope things are going well for you. So, settlements all the way up here, 42.31.50. We've gapped. We got a weekend gap. We've got a daytime frame gap. We've got a lot of overnight shorts in this market. And those overnight shorts are really kind of up against a previous gap that we had a couple of weeks ago. Naked points of control, naked points of control. There's still visuals. There's still structure to be fixed down below. Not only that, we've got on the TPO profiles here, Friday's low, even with the low here, this is considered not a very strong low. And then when we get to the other side of the gap that we see on that 30-minute chart, we get down to this. We've got a weak low here. So there's all kinds of weaknesses and obvious weaknesses and some smaller, not so obvious weaknesses down below for us to go and recheck. I'm looking forward to seeing what happens if we can close this gap and get to this naked point of control, maybe even check this poor low to see what the market does after that. So we may still have some continuation to the downside ahead of us. Obviously, we're opening with a gap. Is this going to put us down to new lows? Nobody knows that. Maybe some information will come out of this symposium in Jackson Hole. We got GDP on Thursday, so we're waiting for some information, which leads me to believe that we're probably not going to become ballistic in either direction. I think this market is going to, as the week goes on, getting closer to Thursday and Friday, find an area of balance and kind of hang in that area of balance. We could certainly see that area of balance coming down to check here and then just hanging out here. Seems like a relatively central location in recent activity. We have to wait and see. But this morning, we have the opening range. We have the opening range rules. If we can't close the gap relatively early, we look to trade in the direction of the gap, which would have us looking to maybe close this gap, come down here and test a couple of these naked points of control, and then find new direction. If we do close the gap, we've got potential value area special situation and potential for more visuals above. But I'm really trying to stay patient, especially on Monday morning. I know I'm going to miss a few trades. I'm going to resolve myself to that right now, and I'm going to be looking for the opportunities when the market tells me it's time to act. All right, so I'm going to just take it easy. If the market offers an early opportunity, maybe we'll take it, but everything I do is going to be based on risk management. Not going to be getting dollar signs in my eyes. Everything I do is going to be based on the amount of risk I have to take to get in and what the potential profit target is. Here's the crude oil. Kind of hanging around here waiting for new information. We've got downside structure, which does remain relatively centrally located between last week's high and low and somewhat in the weekly kickoff area here. What did we do? We lost 13,000 in open interest on Friday. Today is September expiration, so we're going to naturally lose a whole bunch of open interest. Taking a look here at what the open interest loss was. So we lost almost 18,000 in September, but we lost 13,000 overall. So overall, we actually added open interest in the months that matter at this point. So we still see some money coming in here in this downside direction. Here's the 30. or the entire community of crude traders is waiting for information on that Iran deal. Of course, that Iran deal is potentially going to bring 1 million barrels a day to the U.S. to the world market. What that means for us, who knows? Downside structure, volume, and open interest still blurry. Where are we? Well, we've got overnight inventory, which was short, now reconciled, now perhaps getting a little bit short again into the open. The open opening below value from yesterday, so I do find that relatively interested, and it looks like we've maybe left the opening range at the high of the session. Well, no, this should be October. Opening range, huge. 67. That's just a huge opening range. We're talking about 60 ticks in the opening range. Think there's a little bit of confidence in this move to the downside. It's part of the opening range. Maybe a pullback somewhere inside the opening range would be a better trade location for us to look for. But we see that the opening has now rejected value from yesterday. We certainly do have some visuals down below. We've got a naked point of control. We've got weekly kickoff low. 87.50 was a previous weekly kickoff low that I've left on there. It seems to be somewhat overrun now and moot, so we're going to take that off. But we've got certainly some sellers off the opening looking to perhaps come down and recheck this naked point of control here. Still waiting for information. As far as I know, I don't think anything has changed fundamentally as far as the information from anything that with Iran that's going on. I haven't seen anything. It may have actually come to fruition. But again, stay patient. If you miss something, it's all right. It's all right. There'll be another opportunity. Here's the Nasdaq. Nasdaq is presenting as a little bit weaker than the S&Ps. It has already come down and traded into and through that gap. The upside structure is broken. We had excess at the high, similar to what we had in the S&Ps. We've got a loss of 5,000 in open interest. Again, that's indication of long liquidation more than new sellers coming into the marketplace. Take a look at the 30. So this is that same gap that we were looking at in the S&Ps. Same gap, same naked point of control, same naked point of control. They're all on the same day. Look where we've opened. We've opened through this gap. Does that mean that we've traded into the gap and through it? I look for those to happen more in regular trading hours. So, with the knowledge of what we are waiting for this week, with the knowledge that the Nasdaq has traded into and through, and we're going to be looking at kind of finishing or rechecking these naked points of control over the next couple of days. I'm going to be looking for this market to start to kind of range in this area as the new information that we're waiting for comes closer on Thursday and Friday. We've got a gap. We've got overnight inventory galore to the downside. Is that going to be enough for us to get a push back up to this range, back up to close this gap? The day session gap we were creating today, as well as the past gap that we're creating, I would say there's a pretty good probability of that happening. So again, even though we are out of range and out of balance, I'm going to stay patient. I'm going to look for opportunities at where I assume extremes might be. Weekly kickoff low, maybe this naked point of control down here, maybe the settlement / naked point of control up here. This is not a gap, but we do have another naked point of control up here, and then weekly kickoff high. I'm not looking for anything ballistic to happen early in the week this week because we're waiting for information. Stay patient. If you miss something, it's okay. All right. Take a look at gold. Gold has been so disappointing lately. So disappointing. All week last week, just one time framing lower. We could have figured that out, I think, when we saw this bearish engulfing pattern here Monday, Tuesday, Wednesday, Thursday, Friday. From Friday into last Monday. This was not a good sign. Basically, one time framing lower on the day time frame all week last week. We had volume take a little bit of an increase throughout the week. We added 1,500 to the downside in open interest on Thursday. Things are lining up to say that this downside auction still looks relatively healthy, and it's telling us that right now with the fact that we've opened with a gap. We have had very little attempt to close that gap since the regular trading hour open. So one of my favorite situations may actually come to fruition. We've got settlement all the way up here, 1762.90. We've got overnight inventory all the way short, down up against an important inflection level like the weekly kickoff low. All right. So, the market's open. We are hanging at the low here. If we get much lower, if I can manage risk down near this weekly kickoff low, I like that idea. You don't know at any time when these overnight inventory sellers are going to get nervous and push this price back towards a gap close, which is also another good opportunity for us because that gap close also includes last week's low. Going to try and stay patient. Market's out of balance, has been, but I got to look for the best trade opportunities. If I'm a longer time frame trader, I got to be thinking, boy, we are really short from overnight. If I'm going to be looking to sell this thing, I think that the overnight inventory adjustment could provide a much better trade location for me. Orion, congratulations. Just take your time. Don't push into it. Just let the market give you that opportunity. Sometimes when we look at that as a target, financial or time-based targets have a tendency to work the opposite. Just follow your process, Orion. Looking forward to hearing of your success. All right, here's the euro. We're about even. Euro to the dollar. I haven't seen that in a while. We traded down to it back here on the 14th of July. We're going to get there again today. That swing low certainly seems like a decent target and an opportunity for us to look for an execution. Volume has been maintaining overall, a little bit low on Friday. We added 5,500 in open interest on this downside move on Friday. That's a pretty big jump. Again, par 1-to-1 with the U.S. dollar, just about. Seems as though they have their eyes on it. They're going to make it happen. We've got a gap to the downside here. Gap rules, of course. Overnight inventory is very short. And again, that same situation where we've got a short time frame community up against perhaps a longer time frame important inflection level down here. If I get the chance down here, I'm certainly going to be looking at the opportunity to see if I can and get a cheap entry down here. Again, some of the best trades I've ever made have been made because they were cheap. Here's the 10-year. Got the yield continuing to push a little bit higher. Right at last week's low, approximately. Friday, volume was okay, but open interest was completely inert. We lost under 100 in open interest. The downside structure still remains. That lack of open interest on that move to the downside on Friday is a little bit disturbing for me. Here we are. Gap. Naked point of control inside the gap. Last week's low. Nope. This was what I was looking for, right? No, we already did that. I'm sorry. There we go. Here's the 10-year. There we go. Yes. Right. I got lost for a second there. I must have been in the Bahamas. So, medium time frame downside structure, again, only 100 in open interest change. Moot. Get a gap above, naked points of control. Last week's low looks interesting. It does. I mean, it just looks interesting. We've got our overnight low and last week's low very close. Looks like a pretty decent possible opportunity. We've got our weekly kickoff low just below, and like lots of targets above. If we can hold last week's low, I think that there's a pretty good opportunity we could come and take out a couple of these naked points of control, because we've come kind of a long way in a short period of time in the daily. Let's take a look at the natural gas. Okay, when natural gas is starting the week above weekly kickoff high. Friday was a bit of a rest day, it looks like. We had another very small change in open interest on very low volume. Market really just kind of hanging around waiting for new information. It seems to have found it today. We got some pretty good potential for a big upside continuation in this market. Here's the 30. So opened in range and value. We've got a whole lot of overnight longs in this market. Really just depends on the regular trading hour session, which really just opened up. If we can't continue to push higher, I could see us getting an opportunity down back near weekly kickoff low, high here for an execution. If I were a buyer and I was looking to say where can I buy this the cheapest, this might be good, because I think a move down to this level in the short time frame would give us that opportunity to take a look at that weekly kickoff high as a potential area for an execution. All these areas for execution, if you haven't noticed, I'm always basing them on how little risk I can take to get into trades. So important to really be good with trade location. I said something last week or the week before that some folks took some notice to. It was, you don't want to forsake trade location for momentum. And in most cases, that is the right thing to do. So, all right, Dan. Still trying to comprehend is the thing. I'm still trying to comprehend is the idea that I don't need to know what's going to happen next in order to make money. Absolutely, it's all in the odds. All in the odds, Dan. Grim Reaper Trader, do you expect to crash worse than 1929 if the Fed raises interest rates again in past after 3 times crashes occur? I don't know. I hope not, Grim Reaper Trader. I've been through a couple of crashes like that, not the one in 1929, but I was a clerk in the S&Ps in 1987 and, trading it in 2008, 2009, 2010, and 11. It's always scary, but it always seems to come back, just a matter of time. I'm hoping that that's not the case, Grim Reaper Trader. There's different situations, and some would say this situation is worse, but the markets are not the economy. I don't know. I'm hoping not. That's all I'm going to say is I'm hoping not. Yeah, just take your time, Orion. Don't rush it. Don't rush it. Just stay in your process. Stay with your strategies that got you to where you are, and you're going to be fine. I'm looking forward to hearing of your success and of all of your success. So Monday, group coaching, 1 p.m. Looking forward to seeing everybody there. Take your deep breath. Stay humble, grateful, and creative today. Don't forget. We have to accept information that may be contrary to what we think. It's always important not to overthink everything we think. All right. Rational investor with kind of wrong part of the cycle to compare to 29. Early 40s. Compared to the 2008, 2022, they're almost identical. Oh my goodness, that's scary. My pleasure, Grim Reaper Trader. Marcelo, good luck, everyone. Trade well. See you for group coaching, and then again for the market recap. We'll see how these markets played out for us today. Looking forward to seeing everybody get out there and profit today. I'll see you in the proverbial trading pit in just a couple of minutes, and be good to yourself today. Remember, is what you're about to do in your best interest? Is this in my best interest? Yeah? Okay, then let's do it. I can manage the risk. Let's do it. Trade well, everyone.